And for quite a few years after that, they denied that such a meeting ever took place. It wasn't until after the Federal Reserve System was firmly established that only then did they begin to talk openly about their meeting and what they accomplished there. Several of them wrote books on it. One of them wrote a magazine article, and they gave interviews to newspaper reporters. And so now, many years later, it's possible for us to go back to the public record and discover in minute detail exactly what happened on Jekyll Island in 1910. Now, who were these 7 men? The first one I've already mentioned, Senator Nelson Aldrich. He was the fellow that owned the private railroad car. He was the Republican whip in the Senate. He was chairman of the National Monetary Commission, which was that special committee of Congress created to make a recommendation for legislative reform. Banking reform, they called it. They wanted to reform banking in America because the American people were very concerned over the concentration of financial power into the hands of a small group of banks and investment firms in New York on Wall Street. That is what they called the money trust. That was a popular phrase. In fact, quite a few politicians had been successfully elected to office on their campaign promise to break the grip of the money trust. And that was one of the primary purposes of the National Monetary Commission, of which Senator Aldrich was chairman. He was also a business associate of J.P. Morgan. He was the father-in-law of John D. Rockefeller, Jr., which means, of course, that eventually he became the grandfather of Nelson Rockefeller, our former vice president. Remember, his full name was Nelson Aldrich Rockefeller, so he derived his middle name from his famous grandfather. The second man at the meeting was Abraham Piatt Andrew, Assistant Secretary of the Treasury. Later, he became a congressman, and throughout his career, he was very important in banking circles. The third man there was Frank Vanderlip, president of the National City Bank of New York, the largest and most powerful of all the banks in America, representing the financial interests of William Rockefeller and the international investment firm of Kuhn, Loeb and Company. Henry Davison was there. He was the senior partner of the J.P. Morgan Company. Charles Norton was there, president of the First National Bank of New York, another one of the giants. Also, there was Benjamin Strong, head of J.P. Morgan's Bankers Trust Company. And incidentally, Benjamin Strong, 3 years later, when the Federal Reserve Act was finally passed, he became the first head of the Federal Reserve System. And finally, last but certainly not least, Paul Warburg was there, probably the most important man because of his knowledge of banking in Europe. Warburg was born in Germany, eventually became a naturalized American citizen. He was a partner in Kuhn, Loeb and Company. But he was also a representative of the Rothschild banking dynasty in England and France. And throughout his whole banking career, he maintained close business liaison with his brother, Max Warburg, who was head of the Warburg Banking Consortium in Germany and the Netherlands. Paul Warburg was one of the wealthiest men in the world. But those are the 7 men on Jekyll Island. And as incredible as it may seem, these men represented directly and indirectly approximately 1/4 of the wealth of the entire world in those days. And these are the men who sat around a table on Jekyll Island and created the Federal Reserve System. Does it arouse your curiosity? What's going on here? Now, for the skeptics who are here tonight, and I hope there are plenty, because if there aren't, I feel like the minister talking to the choir. I know there are always plenty of skeptics in my audiences, and that makes me feel very good. For the skeptics, you're probably wondering, did it really happen that way? Surely Griffin is exaggerating to make a point. Well, yes, it really happened that way.